Greetings all. It is Tuesday, May 20th. Have a great show planned today. We have a special guest. Looks like I'm having some trouble streaming to X for some reason, so I'm not sure what's going on there, but all good. I'm just going to remove that, but I'll post it later. Anyway, we have a special guest today, so I'm excited to bring him up. Of course, real quick, I want to get started on I like doing my quote of the day. Today, it is making yourself accountable for showing up every day is a huge gift to yourself. And I will say, it's a huge gift to your future self. I had one of those mornings. I'm sure you all have had these mornings where it's like, it was tough to get up. It was rainy outside. It's cold here in Chicago. It's like, man, maybe I'll sleep in today. And it's like, you know what? No, I'm going to get up and make my espresso. I have to make that every morning. And I got my butt into the gym. I just say, like, some days it's really hard to get in there, but I never leave the gym feeling upset that I went. And it's all about discipline. And, I thought that quote really embodies that. Like, hey, make yourself accountable, hold yourself accountable, have the discipline, and you're doing it for your future self. That's all I got to say about that. And our guest is Tyler. You probably heard from him. If you're in DePIN, you probably know who he is. He's with Unleashing DePIN. Tyler, thanks for coming on today, man.
Brad, thanks for having me back. I'm excited to be here for the stream. It's going to be a good one.
Heck,
this is actually round 2 for the day. We did our your weekly Twitter space earlier.
We did. That was a good discussion, I thought. We always said we have got a good group. We all have different kind of viewpoints on things. It's a good thing, though, I think.
Yeah. Yeah, that's what we need. We need diversity of opinion, diversity of thought. That makes keeps the conversation alive.
For sure. Look at that. We got Justin was there earlier as well. So welcome, sir. Dude. And we have another guest here. We got Nick. How's it going, man?
Oh, Nick's muted.
Oh, I'm good. How's it going?
Doing well, man. I think it's been a while since we last spoke. I think we met one time briefly.
It's definitely been a minute, but I've been following all the content you've been putting out and think that everything's been awesome so far. A lot of great takes lately, especially within the DePIN space.
I know. I always tell people when they ask me for, who do you go follow and listen to in DePIN, I'm like, gotta go check out Brad, because he keeps it 100 with all the takes and content, and you teach me so much. So I appreciate that.
I feel like you guys are a wealth of knowledge as well. In the amount of interviews y'all are doing, the amount of stuff you're pushing out, like it is wild, man. So we're all striving every day, and I feel like we all have different takes. Sometimes we got some hot takes. They don't always come true, but that's what's fun about it, man. But super excited to bring you on because you guys have some huge news today. Actually, you know what? I haven't used this one yet, so we're gonna pull it up. Guys, we have some breaking news. Some breaking news from these guys. So I don't know if you want to speak to it, or either one of you. In the news that you guys broke earlier this morning, but I don't know. Whoever wants to break it, man, because this is big news for anyone.
Nick, take it away. Nick did the lion's share of the work between the two of us, so this is his credit.
Yeah. So if any of you guys are familiar, remember about a year ago, maybe a little bit over a year ago, we released DePIN Pulse. We were generally pretty unsatisfied with the state of general DePIN explorers and access to DePIN data within just the broader community. And so launched a very primitive tool about a year ago that was live up until yesterday. DePIN Pulse was great. We continually expanded it. We were able to add data sources from all of our partners and then some, but felt that it was really kind of lacking a few key features that maybe differentiate or provide deeper insights. And so we got to work in building a DePIN Pulse v2, which went live today. DePIN Pulse v2 is going to have all the things that you're used to, plus some more granular macro level insights, statistics on where people are launching, what chain they're launching on, revenue metrics, resources available to a given network, so like GPUs and in the future wireless access points and anything kind of in that sphere, or megawatts of production within the energy industry. And I think most notably, we acquired Who Loves Burrito and DePIN Ninja to make this all happen. They've both been curating some awesome data sets, both built out a lot of tooling. And so wrapping all of this up under one platform with a unified team and a clear direction that we can move forward has been the goal. And so we're excited to share that with the world and want to hear A, feedback, and B, what do you want to see next?
It's awesome. Awesome news, man. Those are like all my favorite places to go to look for the DePIN analytics. So having all in one place is going to be freaking awesome. I don't know. Are you able to share your screen if you want to pull it up? I mean,
yeah,
I can if not, but if
I got it.
That'd be awesome if you could give us a little walkthrough on there, because be pretty cool. Let's see here.
We both posted that at the same time, Brad. That's funny.
Oh, good. Let me. I was like, man, that came up nice.
While you pull this up, Nick, I just wanted to provide a little bit more context. We've been kind of, as we're all in the business of aggregating these different data sets and trying to curate as much real-time information, the EV3 Labs team with DePIN Ninja and Who Loves Burrito were incredibly valuable sources for us in terms of, finding new information and doing things. And so this truly was a very collaborative effort that would not have been possible without them. And so we're very, very grateful for all the work that they, put in to kind of help unify this information under one roof. And so we're huge fans. We're really excited to be working with them in this capacity for providing this. But yeah, here you go.
Heck yeah.
Yeah, so the new site is going to be pretty similar from like a navigating standpoint, but some key things that you'll see that are different. Obviously, it doesn't look terrible anymore. Tyler and I have both gotten a little bit better at web design in the last year or so. You've got your DePIN leaderboard based on revenue, where you can see all the projects that we have revenue statistics for. You can view the source on any of those statistics if you hover. You can also see some other interesting metrics like market cap, a revenue multiple between revenue and market cap, FDV and 24-hour volume on the token if the token already exists. And then popping over here to chains, a lot of that similar information, TVL, 24-hour fees and revenue for the chain. But you can also see how many DePIN projects we have in our database that are either building on or have launched on that chain. And so I think we hear a lot about like Solana being the leader in DePIN and having the most projects. And I think a lot of the ones that have the most mind share do, but Ethereum leads by a significant margin on this front. Coming into chains, this is something new, a lot of that same info, but just being able to see all the metrics on how many DePINs are on chain versus some of the metrics around that chain. Pre-TGE will show you some of the things that don't have a live token yet, but are on the horizon, and as much info as we have about them. Mining and quests stay relatively the same as in our previous product. Fundraising is one that I'm really excited about. We've been tracking all the raises in the DePIN sector and now have them get added as soon as they pop up, as long as we have access to them. Rounds, amounts, all of that good stuff to track which projects maybe you should be getting involved with from an early standpoint. This compute tab shows you the supply of different GPU cards across the 4 marketplaces that we have access to this data for. Hoping to expand this to other resources besides GPUs, so more general compute resources, but then also more GPU marketplace providers, because there are many more than 4 of them. We just don't have a public access to that data yet. And then also looking to add some wireless and energy statistics in a similar format. And so that'll probably be the next push that we make. Events-wise, we've got everything going on in the DePIN ecosystem, both online and on-site events, and any side conferences that may be available. If you're at Accelerate this week, we've got a few for that. And finally, you've got your podcasts. Anything that's launching in the DePIN space, we try to track. Got all the pods here, so you have one place you can come and listen to the freshest content in the space. And if you ever see that we're missing something on here, you can just request, send us a message, and we'll be sure to add it as soon as possible.
Wow. Y'all, it looks, not only does it look really good, but so much good information. Really kudos to you guys. And for anyone that's looking to get into DePIN or following DePIN, this is like your go-to for sure. I'm pretty blown away, actually. So awesome work on this, guys.
Thank you. Yeah, we're super excited. We're super excited to get some people using the platform, and really just want as much feedback as we can get about what people aren't able to access data on and how we can present that data. The idea here really is to be less of a hub for analytics and be more of a comprehensive stack for analytics, being the DeFi llama of DePIN, if you will.
If people do have like any suggestions, I guess you have a request. You said you had the request button there on the website. Is that the best place to do it?
Yep, they can drop a request here, or if we're already connected, shoot me a DM. I think my DMs are open on X anyway. So yeah, however you can get in touch with us is the best way to get in touch. And yeah, we're happy to implement your feedback.
Awesome, man. Really good stuff here. And make sure to follow, let's see, Unleashing DePIN. And then what are your personal accounts? Let me see if I can pull those up real quick.
Yeah, mine's just Tyler something. What is it? Tyler Bosco.
I think I've got you on here. Let's see. I've got Tyler's. Nick, what's your...
It should be 0x Metalite, META.
0x Metalite. Okay.
Wonder if I can.
Oh yeah, we follow each other. All right, I thought we did. I was like, man. Let me pull. I'll pull these up. Let's get us all up here real quick, and then I'll pull that up real quick, just so you guys can make sure to follow all of them. So we've got Nick here. So make sure to give Nick a follow. Also, we have Tyler here as well. And then obviously Unleashing DePIN. Yeah, you gotta follow them too. And then check out, guys, like their podcast, amazing. Obviously, it's going to be on the DePIN Pulse website, linked up in there as well. But highly recommend you guys follow their podcast. They're on Spotify and also Apple Podcasts. And they interview a lot. I mean, if you look at the recent episodes, I mean, they're cranking these things out. They're meeting with all the best minds across DePIN.
You showed me another fix, Brad, because we're technically on episode 65 or something. So we've got about 30 on our website that need to be updated.
Okay.
Nick, one more thing to add to the backlog.
I know this was another one of the things that we built before we really understood how to build a good website, and so this whole page probably needs a good clean out.
It's funny. Every day I decide when I make my cover page for the live stream, and this is what got my attention. It said, this guy tweeted this. He said, anybody noticed that Hula Burrito's site has been changed to DePIN Pulse? And they're saying the old one was a great tool, but I'm loving this new one too. So they noticed the change over there over to DePIN Pulse, and then Tyler's like, "Hey man, I got an announcement today." So this all worked out pretty well. But yeah, very clean website, and excited to see you guys continue to push that forward. So very cool stuff there. That'll definitely be my go-to from now on. I'm looking up the statistics, so.
We're excited. We're excited to hear that. And yeah, like as Nick said, if there's things you want to see changed, feature requests, all that kind of good stuff, definitely let us know. We are, it's hard because there's so much happening in the space, either covering it from the podcast side, trying to do what we can with research, for interviews and whatnot. We try to keep as much, no pun intended, of a pulse on the space as we can, and so hopefully this will be something that is scratching the itch for everybody else that's trying to stay up to date on what's going on. And really, I think the thing that I'm most excited about with kind of this collective initiative here is really a data first mentality around anything from traction to just what projects are talking about and saying. I think we might even get into this a little bit later, Brad, but one of the things that we're always talking about is, kind of like, how do we keep maturing as an industry, and what does it look like as we've got new sectors that spin up. And so I think at the end of the day, like the on-chain verifiable data metrics should be the leading indicators for a lot of everything from price action to kind of interest and so on and so forth. So, I'm personally very excited to be able to kind of lead with that from a data-driven perspective. So,
100% agree. 100% agree. Let's see. We got William. What's up, man? William was on our space earlier today. Thanks for joining. We have Bart. How's it going, Bart? Hello, sir. And Joe. Joe, we haven't seen you on there. Okay, Joe. DePIN's the best. That's what Joe said. All right, so I do want to jump into a little bit of DePIN news. If you guys want to stay on, I'd love to pick your brain on some of this stuff because I think it's pertinent. So let's see here. One of the things, Demo is a project that I think we're all very into. Obviously, I have a pretty sizable fleet myself, but they announced that they are now up to 1.2 apps per vehicle just in the last few months. And that's the name of the game for them, is getting more usable apps. I'm actually going to be bringing on some of their devs onto my live stream to interview them about some of the apps that are being built, but it's all about getting used. But I thought this was interesting. Rob brought this up. And he was talking about how he feels that instead of DePIN, DePi, I guess physical AI is a better fit for the Demo network than DePIN in his opinion. So curious, y'all. What do you guys think about that? I mean, as DePIN grows, do you think we're going to see these subsectors? Do you think that's necessary? Do you think that muddies the waters, makes it harder for people to follow? Like, I'm curious what your thoughts are on these like subcategories within DePIN.
Oh, Nick's muted again.
I don't know how that happened. I think the acronyms need to go. I agree with Rob here. I agree with what Alex said, and I saw a tweet under a similar vein earlier. But yeah, I mean, Demo is not a sensor network, right? It's more of a platform for connected things. I don't want to say devices, but things, right? That could be a car, it could be a human, it could be an airplane, not necessarily vehicles either. Like you could have a robot connected to Demo, right? And Demo is the permissionless access layer for the data that these things generate, right? It's not sensing one specific thing, and you wouldn't necessarily bundle up that data and sell it as a particular data set. It's the access control that separates Demo from a sensor network, right? You can, if your car supports it, you can turn on your car from the Demo app, and that's I think a pretty interesting and novel use case on that front. But the acronyms need to go. It's like DePIN is a great catch-all term now. For a while, it had a lot of meaning, but anything that's not a DeFi app is pretty much DePIN now, is the general gist of what I'm seeing in the market. I don't know how you guys feel.
I think I generally agree with that. Honestly, from a project perspective, if we're looking at Demo, I 100% like see where he's going in terms of why they would sort of self-title that as something that makes more sense. But I don't have much more to add over and above the fact that I think I generally agree with everything that Nick said with respect to acronyms and kind of splicing things up. It's a good catch-all term, and they'll probably find that the long tail of mass adoption is going to be around the AI use case. And so from that standpoint, we go where the value capture is going to be predominantly. But I also think that in the interim, or maybe the shorter term, that there's going to be quite a few other high value applications that aren't necessarily just AI related. And so, but that's just my my 2 cents on the matter.
Yeah, I hear you. I think like DePIN is casting a pretty wide net now. So I hear what you're saying about the catch-all, like, and I think people want to differentiate within. I think that'll naturally progress. I still think like DePIN is going to be a very recognized term, though. Within the space. Obviously, you guys unleashing DePIN Pulse, DePIN connections.
Yes, we already did a rebrand once from unleashing DY to unleashing DePIN. So I always have to remind Sammy, is like, thanks, man, you made us happy. No, but it's we will prevent any further rebrands, ideally. But yeah, I mean, at the end of the day, like there is it's like a hand in glove with DePIN and AI and all this data collection. People say, DePIN is going to be the eyes and ears of these DePIN models, and I fully agree with all of that. But I generally seem to like the term. I also personally hate saying the word DePi. I don't know what it is. It's not like a jarring term, but it doesn't, I don't know, it conjures some other weird thoughts that just, it's like centralized pies or pie. I don't know. It doesn't do it for me as much.
I hear you, man. What's worse, DeFi or bullish?
Probably bullish now that we've beat that term to death.
I know Suburban can't stand it. I think it's so funny when someone says bullish on the space every Tuesday.
I know. Right?
Other question I had, and curious what your guys' thoughts are, because the sentiment it changes so quickly in crypto, right? And we're starting to see things like this. The bull market is totally finished. What you've experienced for 2024 may never happen again. I had this comment on one of my videos, like, there's never been such a thing as an alt season before. Never happened, never will happen, et cetera, et cetera. Yeah, so curious what you guys are thinking about that. I mean, you look at the market cap for alts, right? For the total two. We haven't gotten past the market cap from the last market cycle. So, I mean, you look at from like 2017 to the next market cycle, and this one, and I would argue actually there's less money in, because when you consider the token unlocks adding to market caps without actually adding new liquidity, we just haven't seen it. And here's like, what are your guys' thoughts on this? Like what's causing it? Because it's not, I mean, some people are bullish, like Arthur Hayes is out there saying that alt season will start once we hit 110,000. Obviously, you have Raul Paul is talking about, hey man, we're about to hit this like banana zone. What do you guys think?
Nick, I get to share my thoughts on like every live stream. You don't get to chat as much, so I want to hear your take on this before I share my thoughts.
I think my like main problem, general market sentiment wise, is I was indoctrinated into crypto under this understanding that like these things shouldn't correlate or track with traditional financial markets, but they increasingly are. I mean, correlation is definitely decreasing very slowly, but like market moving events that have no effect over crypto tend to move the crypto market in unintended ways.
Like Nvidia stock dropping.
Yeah, Nvidia stock drops, Bitcoin drops, like that. I think like to an extent could make sense, but like when you get news of some sort of geopolitical event that causes US economy uncertainty, that should be a catalyst for Bitcoin. It's really not. At least most market participants today don't view it that way. And so I'd like to see more of that correlation. That said, the crypto market feels good right now. All markets feel good right now. I think all of the tariff and trade talks that people were concerned about have generally subsided. And so I'm excited to see what's next. And I think the hot take that I heard today is that there's going to be a higher TVL of stable coins than of actual like non-stable assets within the crypto economy in the next year or so. Based on yesterday's announcement of the Genius Act passing or moving to the next stage, and then also just general stablecoin adoption is on the rise and only increasing from some of the biggest players in the fintech ecosystem.
Yeah, I mean, my perspective specifically with respect to alt is that I've personally been surprised that the correlation to Bitcoin price has lessened over the years. Like when I got into crypto, the comment was always 100K and 10K. And I always bring this up because it feels like that's completely dissipated from the narrative, you know, and we're seeing, frankly, like and Brad and I've had these off, you know, behind the scene conversations. I was surprised that ETH rallied as much as it did. I know they had their big upgrade, but you know, I'm generally speaking on the alt market. I think it's wasn't on my list to have Bitcoin back over 100K and have Solana down at like 160 something or 170 when, you know, a few months ago we were well over 200 and you know, the Bitcoin price was kind of going down, going up. Obviously there was the Trump meme coin that had a lot to do with some of the Solana price action specifically, but I have been personally surprised by the lack of alt price action with respect to either A, the general markets, or B, even just Bitcoin going back over 100. So I don't know what the catalyst is going to be necessarily, but it's certainly not been my initial prediction by any means.
Yeah, I agree. I find it, I don't know. I think part of it is it's been institutionally driven, it seems, at least, and that's why Bitcoin's done so well. But it is strange to me. I mean, it's to Nick's point, like, yeah, I agree the sentiment, it is very correlated with traditional markets. I think we're starting to see maybe some decoupling from traditional markets. I mean, the fact that yes, we had a bit of a pullback, but I think a few years back when the trade stuff happened, we would have seen, I think, a much larger pullback than what we saw. I think it's held up better than it would have a few years back, but there is definitely still a correlation. By the way, Tyler, remember when we had our hot takes? I want to call this out. And I said that Ethereum would outperform Solana as my hot take, and everyone laughed at me.
I was like the chief laughing person, but boy, was I wrong.
Well, we don't. The story is not completed at this point. We don't know. But it was one of my hot takes that, like, just because the institutional interest in the layer twos in Ethereum, like, I could see it outperforming from a percentage standpoint from this point. But we'll have to wait and see.
I think the ultimate question with all of this, and this is something I've really tried to wrap my mind around quite extensively within the DePIN space, is like, what are so much of the price action seems to be a function of either like global liquidity or just narratives that are pushing. So like, obviously the meme coin cycle pushed a lot of transactions on Solana. There was positive price appreciation on Solana as a result of that. And so I think that the ultimate question that we need to sort of figure out as an industry is like, what are the metrics by which price action follows? And in the alt market specifically, you know, at least if you look at things like Ethereum, there's a massive disconnect with some of the fundamentals and the price action. Like, and if you speak about L2s specifically as something that's going to draw a lot of value, I agree with that. But the trickle down effect to Ethereum as the base chain is a little questionable about how much of that value is actually going to be like rehypothecated to the L1. And so I don't feel like I've got a confident baseline metric by which we can use to sort of either project value or like to ascribe as the underlying base for where value is going to be coming from. And so basically what I do every time like the Solana price moves in significant directions is I try to go see how correlated it is to actual on-chain metrics, because I think there's more, you know, there's a lot of activity, and it is an L1. It's a cleaner model to use between like either wallets on chain or like daily active users, monthly active users, whatever they say. TBL is kind of one metric in there. And so I'm like constantly in real time trying to say, okay, if the price is here, what's happening on the fundamental level, and how much correlation is there? Joe's comment is it's all BS. And I think to some extent, like that kind of has been a reality where there's these massive price fluctuations that are impacted by things very unrelated to true fundamental data. And so it makes it hard from a person like myself who's trying to find like the deep value database for where all this stems from.
I think, you know, and I pulled this up. This is the price of Bitcoin overlaid with the M2, global M2. And you see it does track very closely, right? Where, and this is it's an 81-day offset. So after global liquidity goes up, it takes time to basically roll through and have its impact on the price of Bitcoin. So it's held pretty well to this point, at least over the last year or so. And I mean, if this keeps holding, it could propel us up to 150. But it's like, okay, so that's fine. Like Bitcoin is very tied to global liquidity. I guess that it makes sense to an extent, because as people continue to devalue their fiat, like this is kind of the hedge, right? That's what it's supposed to be. But as far as the alts go, I 100% agree. Like I think with DePIN, we're starting to see the revenue get turned on, but the market caps we've seen historically, especially last market cycle, none of them were justifiable. I mean, it was very speculative buying. It was based on what the future potential could be. I'm curious to see, now that we're seeing real revenue come through the door with token burns, as we see that ramp up, especially with some of these decentralized GPU aggregators that are seeing some really meaningful volume. You look at like a project like Aether, for example, like, will we start to see that decoupling when the markets drop out and less volatility and more valuation of tokens based on like the true value? That'll be, I think, really interesting to see. But up until you get to the point of that revenue, like it is very speculative valuations. I mean, we kind of have to face that truth. Man, that's kind of the same with, I mean, you start up a normal business, it takes years to be profitable. It's not like you're profitable year one. So, I mean, I think there is a more speculative nature just in general in crypto. So there is like a lot of more potential upside, but there's a lot of downside with that as well, I think, that people need to be mindful of. Let's see here. So I just want to make sure. Okay. Yeah, I'll check my Discord, man. Justin says DePIN Pulse would be great for getting concrete numbers so they're not indoctrinated. Yeah, I agree. I think for anyone, like if you're just getting into DePIN, or even if you're really dialed in on DePIN, it's a really good place. Because before you'd have to like pull data from so many different sources. Like it's going to be really nice to have a place that you can go to find all that in one spot, I think. Bitcoin is at 3% of its all-time high, and people think the bull run's over. I mean, yeah, there's certainly some macro stuff going on right now that is a little bit troubling from looking at the overall economy. But the market's not necessarily the economy, and we'll have to see how that plays out. I mean, we're seeing the fiat system kind of fail in real time in front of our eyes to an extent, like not completely fail, but we're seeing things break. And, that's essentially what Bitcoin is built for. So it'll be really interesting to see what the price does with all that. What's up, Robert? And he said, ETH is too slow and expensive gas fees. I mean, I agree, unless you're in the layer twos, but the problem with the layer twos is not enough of the value is getting to the layer one. Like, that's the big bone that people have to pick right now with Ethereum, is like, the fees are so low that there's not a lot of value rolling back to Ethereum as the layer one, and everyone's building on the layer twos. Now, maybe that'll change if there's enough volume on the layer twos. I don't know what you guys think about that, but
I think in the current state, that would be a hard thesis to run with, is because the scale would have to be extraordinarily more than what it is now. To see even kind of a percentage blip on kind of the ETH value accrual. And it's not to say that, they can't roll out some proposals to try to change the economic model so that there is additional value accrual to the L1. But at least in the current day, I mean, there's basically, I'm not going to say no incentive on building on the L1, because there are companies and projects doing it. But there's a heck of a lot more value to want to go to something like Base, because it's scalable. It provides all the, the speed and cost benefits. It's EVM compatible. But how much trickle down value is there to the ETH L1? Not a whole lot. By the way, I just saw your DePIN rock shirt. Where did you get that? I need one of those.
It's from my buddy Kevin. He's a Helium OG. Trying to think of that. Flywheel Systems is the name.
Flywheel Systems.
Yeah,
OG name in this space.
Let's go. Yeah. He's good people. He's good people. By the way, Nick just brought this up. So the Genius stablecoin bill did move forward. There were some reports that had passed. I shared one of those yesterday, and it turns out it moved forward, but probably markets seem like a 96% chance that there will be a stablecoin bill passed this year. It looks like it's very likely, at least they believe that this thing will get passed. So wanted to talk to you guys about the impact you think that'll have. One of the things that was brought up yesterday I thought was really interesting was the fact that the stablecoin issuers in the next 5 years are expected to be the largest U.S. Treasury holders.
Yeah.
And that's something that's an angle, where the U.S. is going to need to create some demand for our treasuries, frankly. And, there is some risk, like with Japan being the number one holder and what they're going through right now. China actually is number 3. They dropped. UK is the number 2 treasury holder at this point, but there's no doubt we need to create more demand and stabilize the U.S. dollar. The stablecoin bill could provide that source, as well as bring a lot of additional capital into crypto. But what do you guys think? I mean, what kind of impact do you think this will have on Bitcoin and alts?
I think it's massive. It's going to be a massive win by either getting the legislation passed, but also just for kind of increasing the value of the dollar ultimately, because so much of the benefits that people prescribe to just crypto in general, you can mostly proxy through a stable coin without having all the volatility challenges or some of the the cost challenges. And so I think from they're trying to spread the US dollar all over the world and try to ensure its dominance. I think this would be a fairly sizable enabler of that. And so I think it's going to be a big win. I also think that with having these kind of stablecoin legislations, it's going to make sure that I think it's just going to spur additional innovation. There is the argument that we have sort of a duopoly being created in real time for the people that are actually issuing the stablecoins. I know that Trump's World Coin or World Foundation, whatever it is getting into that market. So that to me is like a really clear signal of where the market and the opportunity is going to be is going. And there's also going to have I'm just reading this comment here about comment for the banks.
I want to throw that up and see. Do you know whether they remove that section or not? That it says disallows users from earning yield and only banks can.
That I did not know. Nick, do you know the answer to that?
I do not. I know there is quite a bit of time that they have to come into compliance once it officially passes. So I wouldn't expect any changes immediately on any of the existing stablecoins or networks that you operate with them, but I'm not sure about that point.
A massive win for banks, not the people, he says. I mean, here's the deal. Like, the banks saw the writing on the wall. Like, they need to shift. And our banking system is sitting on massive unrealized losses as it is. Like, it's not a great situation. A lot of them are sitting on like long-term like treasuries that are yielding 1% and 2%. That's not a good, and commercial real estate for that matter. But I think they see they need to shift now. If this is the case, I need to read into this because I'm not aware of it. When you say users, do you mean if you're like an individual depositor and you deposit in your bank, you can't get a yield on your stablecoins? Is that what you're saying, or that you can't stake your stablecoins elsewhere and get yield? I guess that's what I would wonder. Because people are going to absolutely be taking loans out against their crypto. I mean, especially like Bitcoin and those assets, they're already doing that. So,
yeah.
But
I think it just opens up a extraordinary amount of access that has not been available beforehand. Mm-hmm. And so as a result of that, it's going to be a net positive. But I do agree to some extent that these nuanced details are highly relevant in terms of how maybe the long-term or the long tail of value is shared or reshared, I guess, with depositors. But I would want to look that up myself to see what's going on that front.
For sure. I think we're going to see a lot more countries push for stablecoin legislation. Well, a lot of them are, have CBDCs, right? So I do think this is a better alternative than a CBDC that's completely controlled by the government. So this is a good alternative, in my opinion, because you look at like the yuan right now, they have CBDC for. They're actually in China, they're forcing people's hand to an extent, paying them, an extra 10% on their money just to get them to switch over to stable coins. That would be pretty troubling. Another thing I want to pick your brain about is this report that Cynthia Lummis was supposed to meet with XRP. Sounds like she canceled the meeting and won't be rescheduling. So it seems like, from an optics standpoint right now, that Ripple, XRP may be on the outside looking in at this point. And I'm curious because early on, it seemed like they were going to be a major part of this whole push to crypto and opening up legislation. So curious what you guys think about XRP. I know, Tyler, we've had some discussions. I think you're talking about how the early days, they're missing parts of their ledger. I don't know if that was you that I was speaking to about that, but
I don't think so. I don't think you and I have actually spoke about
Ripple
and XRP.
But curious, like, what are your thoughts on it? Do you think this is like a big deal, or do you think it's just overblown and Cynthia Lummis is just showing her love to Bitcoin and loyalty to Bitcoin at this point?
She's always been a Bitcoin advocate, Bitcoin maxi. I think this probably reflects that more than XRP being out of the loop, but they are definitely not leading the pack anymore. They're still in the inner circle, but like towards the outside of the inner circle. I do see them trying to maintain that dominance. There's a rumor going around that Coinbase and XRP, or I guess the Ripple Foundation, are in a bidding war trying to acquire Circle. That was the news that dropped this morning. And so, I'm interested to see who wins. I doubt it's XRP. But if an acquisition does happen and XRP can make that happen, I think that's not necessarily bullish. I don't think an acquisition of Circle by any U.S. regulated issuer is going to be favorable for our industry.
That's an interesting take.
That is.
There was a really good one of the Unchained, not the main Unchained podcast. It was either the Bits and Bips or the other one with the VCs. They were talking about Circle and kind of the potential acquisition. This was even like a speculated comment several months ago that I thought was really interesting. I agree with Nick. This is probably more to do with kind of Bitcoin maxi vibes than it does anything else. I'm also, maybe I'll reserve some of my personal feelings around kind of Ripple and XRP, but it's probably not much more than just a differing of some Bitcoin opinion that spurred into drama, or tease, the kids say.
I don't know if y'all saw this. It says Robinhood submitted an SEC proposal to regulate tokenized RWAs. What are you guys' thoughts on RWAs? I mean, I think it's going to be massive, but I feel like there's a lot of RWA projects that are just kind of smoke. Because I think from like a legal and regulatory standpoint, a lot of them are making claims about things they can do that I don't really think they're going to be able to do. But what do you guys think about RWAs as a subcategory?
It's another one of those terms I don't love. I really love the idea of being able to buy equities on chain, buy exposure to FX markets on chain, buy commodities like gold, silver, oil on chain. Like, that's an awesome use case for RWAs. But anything that is maybe like a net new asset, something that you're trying to tokenize that may exist outside of crypto, this doesn't go across the board, but it's traditionally like nobody wants to trade that. All the RWA stuff happening, that's kind of like DePIN adjacent, I don't love, but the idea of being able to trade things that traditionally you would need to go through a broker for, but you can now do on-chain permissionlessly, I love that concept.
Yeah, I share similar takes. The the episode. There was another episode of it's the Chopping Block, by the way. They're the Unchained podcast. It's got the Dragonfly, some of the Dragonfly team and a few other VCs, but they specifically invested in a company that's been pushing a significant amount of regulation to try to enable what Nick was talking about, where sort of there's a true across the whole supply chain. Because one of the other challenges with the RWAs is like you've always got this, kind of issuance or custodial challenge around like who's the arbiter of, saying if you talk about a piece of real estate, for example, like, okay, what's like that whole supply chain of who, custodies the deed, and then what you issue on top of that. And how do you know that there's not been any kind of funny business going on in the interim, let alone talking about stocks or other commodities? There's a company that they invested in that's pushing a lot of regulation or pushing the regulatory framework to try to enable that. It sounds like they're really close. I don't remember the name of the company off the top of my head, so I want to go back through and look in to see what that was. But if those types of kind of advancements happen within the space, I think that will unlock more opportunities around the RWA market. People, and I never really thought about it this way, but some people always say that like the stablecoin market is the biggest RWA play that's happening right now, and I guess it's to some extent that's kind of true. However, I'm less optimistic on RWAs versus something like DePIN, just for a variety of reasons we've talked about on the space, on your weekly space a couple of times. But
I agree. I agree with you guys 100%. Let's see here. What do we got? Let's see. We've got Ethereum supply exchanges has dropped to 4.9% for the first time in history. That's pretty solid. Bitcoin, same thing. And I'm like curious when the OTC that's going to dry up, because I think we will see the real supply shock when that happens. Saw this that someone was making a Bitcoin payment at a Starbucks. That's pretty freaking cool. I'm curious, like when they're going to. I think if Bitcoin ever is like a medium of payment, I think they're going to have to get rid of the capital gains side of it, because otherwise you're like paying capital gains or losses on every transaction. Seems like pretty crazy. But if it's a store of value like gold, it's a different story. Y'all saw this. I don't know if y'all saw this or not, but the Libra, we were talking about the Trump meme coin, the Libra thing happened right after then. It sounds like they have shut down the unit that's investigating it, the Argentinian president. So not a surprise.
You gotta love a little cronyism on a Tuesday for
right.
Able to...
Right. And hit the like button, everybody. Share. Hit the like button. Make sure to follow these guys if you don't already. And one other thing, I'm curious what your thoughts are here. This has been going around. It's alleged at this point, but there is a rumor going around that Charles Hoskinson was misusing $600 million worth of AWA. And curious if you guys have seen any of this. At this point, I don't believe that there's any definitive proof of this. So, but this is a rumor that's going around. So,
yeah, I'm not a huge Cardano fan. I think Charles is an interesting guy. He's had some podcasts that I've listened to, and he's clearly very smart. He's a lot more on maybe the research side, and he's kind of using Cardano as this like internet casino game to carry out his research initiatives. I thought the Bitcoin move, what was that, in November at this point, was really just marketing ploy. I know they're obviously doing things, and like some of the Bitcoin people, even like the Lightning folks were somewhat on board, but I'm not a huge Cardano advocate, generally speaking. I have no information on this alleged misuse of funds, but
yeah, we'll see if anything comes of it. I am curious to see what happens with Cardano. I mean, it was a big runner in the last market cycle. There's always been a lot of talk about Cardano, like, bringing banking to the unbanked world and emerging countries. So we'll see. I hold some Cardano, not a lot though. I'll say it's not one of my large holdings by any means. So getting into like the broader macro news, and I think this does a really good job of summing up what we're seeing right now. Like, Stocks are rising like the trade war is over. Gold is rising like the trade war is escalating. Yields are rising like the U.S. has avoided recession. Oil prices are falling like the U.S. is entering recession. The U.S. dollar index is falling like inflation is gone, but Bitcoin is rising like inflation is back. There's a lot of conflicting stuff going into the markets right now. One of the things, though, that I have talked about a lot is the Japan yield. They seem to have really lost control of their bond market, which they've been able to keep rates very low for a long time. And of course, they have probably the highest, if not, I think they're top 2 in debt to GDP ratio. But the big concern here is they have a lot of ties to the U.S. economy. In particular, the reverse carry trade, and so they saw the weakest 20-year bond auction since 1987. So the question really is is the Bank of Japan going to step in again and build up demand to get their yields back down? Because we saw this last August. I'm sure you all remember, like when we had the market kind of tank because of this reverse carry trade unwinding, essentially. So that is the concern here. And keep in mind, Japan is the largest treasury holder. So
yes.
So it's something to certainly keep an eye on. While things are trending, it seems like, the markets are trending up, Bitcoin's trending up, like everyone's ready for alt season. But it's like, there's still a lot of stuff in the background happening. I always bring this stuff up because it's important to touch grass, keep this stuff in mind. The other thing I'll say is like Klarna, which is the buy now, pay it later service. They just saw a $100 million loss in 2025. People are not paying off their credit, and people are using the service for like DoorDash orders. It just is very obvious that it's a large percentage of the population that is very much struggling. And I will say, like, the stock market and I guess crypto markets likely as well are largely driven by top half of the country, but this stuff has an impact, right? When it's all interconnected. As people spend less money, companies have to start laying people off. And then you start to see that hit their bottom line and their stock prices, and people have less money to invest. So it is all worth keeping an eye on. I thought this is interesting. So this guy, highly recommend following him. He has an import business. He's worked with China. He's very, very dialed in on the tariffs and the impact from China and their manufacturing and everything over there. And I think we'll see more of this. But, I don't know if you remember when the White House, Walmart, Target, and Home Depot went out there, and then they started aggressively buying again before the pause was announced. And there's some talk that they got some insider information in that meeting that they gave them a heads up of what was coming.
Yeah. So I'm like keep political views aside, but I'm sort of a hardcore libertarian, and am always concerned around cronyism. I think it's a huge detriment to our just economy, both nationally and internationally. And so I would not be surprised by any means if some of this was actually happening. It was a really, really crazy time too, because you had, these Fortune, I listen every Sunday. There's a CFA guy who does kind of an outlook on the market. And when a lot of the heightened tariff conversations were going on, it was also right around earning time. And most every report, or when they do their kind of call with analysts or shareholders, they give kind of their opinions on how things are going to look for the next 3, 6, 9, 12 months, so on and so forth. And he said, I would bet you that every company that has an earnings report this week is going to delay their kind of advice on that. And every single one of them did, which it was such a telltale sign that very few people at the highest level had really any idea. And so when you see these kind of back deal looking decisions being made, it's not hard to draw the conclusion that maybe they had other sources of data that impacted decision making. So I wouldn't be surprised. By the way, one other data point with respect to kind of this paradox we're in with the economy, is it doing well, is it not doing well, is the the default rate for auto loans, or the delinquency rate, and the subprime market hit an all-time high for the last 20 years, if I'm not mistaken, in January. And I think that continued in May. So we're, if you're using that as another indicator of economic strength, bit of a concern there too.
For sure. Yeah. Auto loans, you have mortgages, you have now student loans that they're collecting on again that people are behind on, credit card debt and credit card payments. All of it is, it's a sign that things are breaking behind the scenes, and the gig economy, people being able to just like download an app like Uber or Lyft and pick up employment, has really masked, I think, how bad the job market is. The problem with that is it only works so long, because on one end, when you have less people spending money, there's less demand for those services. And then you get, an oversaturation of drivers on those. So it really just delays the inevitable. So I think a lot of what we're seeing, we probably would have seen much larger warning signs sooner, maybe 15, 20 years ago.
Right.
So let's get over to some of the global news. I normally end up with some global news here. And one of the things in Spain, man, so if you remember, like a month ago, they had like a massive power outage, and today they had a telecom blackout and all of their emergency lines went down. So it's really strange. It makes you wonder, like, are these attacks, or is this just like the network's failing? It wouldn't surprise me if these are attacks, they're not really coming out and saying that because they don't want to freak people out. But it is odd that, like, back to back, just last month they had a power outage as well.
Yeah. I'm not, I don't always jump to these conspiratorial conclusions on things, but when it happens at a cadence that's abnormally high, that starts to beg the question: is there more to the story than we're being told? And I don't think it's, again, another hard conclusion to draw, that there may be something like an attack going on. But
this energy data DePIN project would be very important. You guys have interviewed some different energy DePIN projects.
Yeah, we've got to have a couple on. We had Glow early, kind of in their cycle, which was super fascinating. David's a brilliant mind, so it was great to hear him. But Nick's currently doing some work around the energy kind of research space, and working on including that within DePIN Pulse, right?
Yeah, I'm trying to see if I can start aggregating some metrics on production for all of these networks. So, like, if you know the number of resources they have, say solar panels or energy gateways or energy monitors, and then also the production of those resources, you can calculate an efficiency based on that. So I've been messing around with that. On the geopolitical front, I think that a lot of people have been blaming what happened in Europe with the power outages on a move to renewables. I actually think that it's because and saying that it would have been more reliable if they stuck with their traditional carbon output. I actually think that it's not the case. I think that it is likely that they drag and drop replace their existing infrastructure with these renewables, but didn't update what happens in between, right? So your transformers aren't rated for this stuff. And you don't have appropriate load balancing the same way that projects like Daylight and like Fuse in the UK are trying to do, where you're not only producing energy, but you're creating energy by turning everyone's thermostat down by 1 degree or turning everyone's refrigerator up by 1 degree. And so doing whatever you have to do to change the output during a high demand situation. In the US, we have mechanisms in place on all grids to do this on at least a micro scale. We're looking to unlock it through DePIN on a macro scale. But I just don't think that the European grid was set up to handle that level of fluctuation, and there was no demand response in place that could have handled that effectively.
Do you guys think, because we're going to talk about AI here in a minute, but do you all think that renewables are going to be able to manage the amount of power we're going to be power needs we're going to see with AI. Like there's a lot of countries that are starting to build more nuclear plants again. Like, do you think that the U.S. is going to turn to nuclear again, or what are your thoughts there?
I'm a nuclear bull, right? Like I want it to happen. I don't necessarily think it has to be nuclear. There are other forms that are not quite as built out that could also attract a similar amount of energy. Obviously, cold fusion is like the number one on that front, and we're super far away from that. But there has been some interesting stuff in the nuclear adjacent space where you're basically trying to create, if you can imagine it, a very small sun on the Earth using magnets. A bunch of magnets like pointing towards the inside of a sphere, and then I don't understand the science behind it, but if all the magnets create this field that creates a ton of energy when they're all pointed at the same direction and at like a perfect cadence. And they're saying that these things are like, it's basically like a nuclear level of efficiency for power, except you could put this at your house and it's totally safe. It's stable at any condition. Worst case, it breaks, you lose power, but there is no risk of meltdown like you see in nuclear. I think that the US is never going to be a leader in the nuclear sector. It would take a very, very liberal administration at the federal level to make that happen. But I'm hopeful that some countries, maybe with underdeveloped infrastructure, will adopt nuclear in the coming years and prove that we've come a long way from the disasters of the 80s and 90s.
For sure. I was reading this book, this When Markets, or How to Listen When Markets Speak, and they talked about nuclear and how they're going to have a major comeback. And I think China's building, they have a ton of nuclear. They're building a ton of plants. Like there are a lot of countries that are building nuclear, but I don't know. There was a time not long ago we thought that there'd definitely never be a nuclear plant built in the US again, but I think that could change. We'll see.
Yeah.
It's really, the problem is and I hate to get political, but the problem is it's not sexy. Like voters don't want to hear on either side of the aisle. Voters do not want to hear that you're pro-nuclear, right? That's just not a good move if you're a politician. And so it's going to take, I think, kind of a radical transformation of the voter base. So I don't know, 50 years from now, I'd expect to see some significant traction on nuclear in the US, but I'm hoping that some more liberalized energy markets around the world can create solutions and test run some of this stuff before we get our hands on it.
For sure. And obviously with AI and AGI, I mean, like the amount of energy needs is about to explode.
Yeah.
Speaking of which, so there's new, I saw this, I thought it was interesting, this new cancer treatment. Instead of radiation, they use this step and shoot proton arc therapy, and they were able to treat this tumor in someone's brain. And it sounds like this is from SciTech Daily, but it sounds like they're testing an upgraded version that could get FDA approval by next year. So that's pretty exciting. That's one of the things about AI that I don't think is talked about enough, is that the medical breakthroughs I think we're going to be seeing in the next 10 years is going to be pretty remarkable. And that, to me, that's pretty exciting.
Yeah, I know there's some cool tech coming out of the Google DeepMind lab. I forget what it was called, but they launched a model last week. It's never going to be available to the public, or at least it won't for a very long time. But it's basically a highly sophisticated math agent, and so they gave this thing like 100 of the most problematic like math tasks in the world, and I think it was able to improve upon, I want to say like 30% of them. Like it could solve all of them, so it's already at above the level of like any mathematician on earth, but then it was able to improve the method to solve 30 of them, which makes it like basically the smartest math mind on the planet, which is awesome to see and really interesting. I think what I'm most excited about with AI is like the component of like unlocking history, I guess you could say. There are so many languages that have been lost, and like we can't transcribe any of these documents, and like an LLM is like purpose built to serve this use case. And There are some smaller firms trying to do this, but I would love to see a larger firm do something like this.
It'd be great to be able to go back and see what was inscribed on like the pyramids and like Göbekli Tepe and all these interesting places that are becoming a little bit more mainstream in terms of the questions behind their history, if you want to call it that. So I could see that being an interesting application.
You mean what the aliens wrote when they built the pyramids? I'm just kidding.
Yeah, that's what I was saying without saying it, Brad. Thank you for translating. Speaking of translation, took the words right out of my mouth.
I saw this. It's funny. It said, our kids would think we were crazy for using Google 20 years ago. So you had to type a question, get 100,000 blue links gained by SEO agencies, open 11 tabs, skim each site, piece together an answer, repeat this process 20 times a day. It's like, yeah, pretty soon those days will be long gone. In fact, I use Grok a lot. I use a lot of AI just to ask a question. It gives you great answers, like, and the sources and everything, man. Like, yeah, I think the days of a search engine are quickly dissipating. I don't know if y'all saw this, that Tesla megapacks are being used to build this next AI data center, and massive for fueling AGI. And AGI is coming, man. But it got me thinking, like, seeing this stuff with Taiwan and China, because the supply chain for all these chips is very fragile.
Yes.
And that's one of the things I wanted to bring up just to close out the show. Looking at these, and NVIDIA obviously is the number one AI chip manufacturer. AMD's climbing, but NVIDIA definitely has, like, by far the biggest market share. But they don't actually manufacture them, right? They design them, they outsource them. They use a company called TSMC, right? And TSMC, by the way, also manufactures chips for, like, Microsoft, for Apple, for Amazon, for Google. Like, basically all of the most valuable companies in the world outsource their manufacturing to TSMC. And in fact, it's estimated that like 90% of our high-end microchips come from TSMC. That's a big reason why Biden passed the CHIP Act. That's why Trump is continued to push that forward. They're trying to build TSMC plants in Arizona, Phoenix, I believe. They've fallen behind schedule because of a lack of skilled labor. But that's why, like, this whole Taiwan-China situation is very important, because if TSMC out of Taiwan were to be taken offline, I mean, they basically said you wouldn't have a new smartphone for likely a year and a half, 2 years, because it would destroy all of our supply chains. So it's good. Let's hope that we don't see any war come up out of that. But one of the things too is that the machines that are necessary for manufacturing all of these chips is from ASML. So I actually have investment in TSMC, ASML, and NVIDIA. But ASML is out of a Dutch company, rather, largest company out of the Netherlands. But to kind of put this into perspective, and I used this in one of my videos before, but this is literally our supply chain. Like, for these high-end chips, you have ASML making the machines that are necessary. You have them going to TSMC, who's then using those machines to manufacture all the chips, and then those get distributed out to all the most valuable companies in the world. So that's why it is super, super important for us to really get these TSMC manufacturing plants built in the U.S. and get those pushed ahead, so we don't have so much reliance over there. I mean, it's a big problem. It hasn't been a huge problem yet, but certainly it is a little scary to be that reliant on that supply chain.
Yeah, I believe they're going live with 4 fabs in the US, right? That was their, like, concession through all these trade talks, is TSMC would build 4 in the US, I think primarily in Arizona, but I know there's a couple other states that are going to be getting one as well.
That's huge. I mean, that'll be such a big move. And some of the critical, like, I understand strategic tariffs, like, and some of the critical plays that we need, like to get manufacturing back here. Obviously, the chips are one. You know, our medications, pharmaceuticals, you know, are another. You know, like steel wouldn't be a horrible idea, but like, you know, I don't know. We'll see how this whole tariff thing plays out. They went about it in an interesting way differently than I would have, but that's just me. That's just me.
Yeah, it is sort of the existential threat to our modern economy, and it's definitely like a catch-22 because we're so reliant, but at the same time ramping up these facilities. I believe the facility in Phoenix was supposed to be done this year, and that's not going to happen by any means because of the lack of skilled labor, to your earlier point. So it does beg the question, like, how can we increase the velocity to scale these things out? Because once we have that capacity here in the US, it will dramatically change the risk dynamics that is currently being imposed on our largest companies here in the US. That are, by the way, if you look at the supply chain, like if you look at NVIDIA, look at all the companies that have made massive amounts of money on the backs of NVIDIA, you know, like the largest DePIN revenue generating companies is one example. So it trickles all the way down to a pretty scary point if one of those things gets displaced in a significant way.
For sure. Yeah, man. Well, that is what I have for the show, man. We covered a lot. I like to cover a large range of things, but y'all, thanks for coming on. Everybody, get to DePIN Pulse. Follow these guys. Follow Tyler. Follow Nick. Follow Unleashing DePIN. Make sure to get on all their accounts. And now you have a go-to place for all your DePIN needs. And they're going to continue to update that website. So really appreciate you guys pulling that together. It's big news. You guys have any final thoughts before we hop off here?
No, I just want to say thanks for having us again. I always love getting to chop it up. Brad gets to go deep. He's connected with DePIN. So I'm always honored to be a guest. So thanks so much for having us. This was a lot of fun.
Heck yeah. And maybe I'll hop on the happy hour tomorrow night. I guess that's Thursday night. That's tomorrow night.
Thursday night. Yeah, I'd love to have you. You're always welcome. Open invitation.
Appreciate that, man.
Yeah, thanks again for having us. Thanks for helping us show off the site, and great combo. Love the macro takes.
Heck yeah, man. No, I appreciate your takes. Like I've learned a lot actually. So you're knowledgeable in a lot of areas, man. So really it was great having you on for sure. So sure everyone else appreciated it as well. Thanks for everybody else in the comments. Thanks for interacting. It's always a lot more fun when everyone interacts. Make sure to subscribe to all of us on YouTube and X. Share it, like it, helps with the algorithm. Appreciate you all, and I will be back tomorrow. Peace.
See ya.